picking up good vibration.
Hi everybody, Alex here from Expert Forex, and in today's video I asked the question, are you ignoring good trading advice? And I'm going to show you how thousands of traders ignore the most basic trading advice, and I'm going to give you tips on how you can take action on the good trading advice that you receive every day in feedback from the market. And for those of you who know me well, this is one of the sayings I quote most, and it is, let the market tell you how it wants to be traded. Because unfortunately the market is the boss and we have to listen to the market. The market will not listen to us. So let's take the example of the fact that you have done robot trading and your robot has traded 20 trades and has made a loss of $1,000. So what is the market trying to tell you? Now the reactions that we sometimes get is, I've been scammed by the robot seller. The robot seller has given me the wrong settings and they do not work. The broker is trading against me and making me lose. I want my money back. This robot is no good. Or this robot doesn't work. So let me find another one that does. And so on and so on. A lot of traders blame their tools, but do not take the advice that the market is giving them. So let's have a look at the advice that the market is giving them. So you've just lost $1,000 in 20 transactions. Now the big thing here is to get value from those transactions. You must understand that all trading strategies and trading results are explained by three very simple factors. And that is your success rate, how many of the transactions you entered were successful, and then on average how much you made on your successful trades, and on average how much you lost on your losing trades. If you control those three factors, that's all you need to be a successful trader. That is how simple trading is, and this applies to manual trading as well as robot trading. So let's just have a look at the calculations that went into this $1,000 loss. If we have a 40% success rate and we've had 20 transactions, that means 8 of the transactions were positive and 12 were negative. Now if our positive transactions made $100, that means the 8 positive transactions made $800 positive. But if we've lost $150 on our losing trades, that means that the 12 negative trades made minus $1,800. And therefore we have now fully explained our $1,000 loss. So that is what happened. So what is the market trying to tell us about that loss and what we should do about that loss? So the first thing is obviously the strategy we're using is not doing well, and it is a good idea to consider doing the opposite of what we are doing right now. So if we can get our success rate up to 60%, then that is the opposite result of what we're achieving now. So how do you do that? You simply reverse the direction of trade. If you, instead of buying, you sell when you get a signal. Very simple. The quickest fix that that you can ever make. And so many traders never consider reversing their logic. They would trade for years and years trying to force faulty logic into the market, where the market is actually telling them, hey, your entry logic is wrong, just reverse it. But the ego sometimes stands in the way, and other factors play a role. And if you look at it, there's some simple answers: just reverse the direction of trade. Then the other thing is, why are you making smaller gains than you are making losses? So all you have to do is increase the size of your targets. As simple as that. Simply increase the size of your targets or make them a bigger percentage of your losses. So in this case, I'm saying that the targets could be $150 and the stop loss can be $100. So now what we've done is that we've reversed potential results that we can get. So successful deals in future will have 150% return, and unsuccessful ones will have $100 result, $100 loss. So look at how we've just by changing these three factors, we can now change the results that we are achieving from our strategy. So all of a sudden now, because we've reversed the direction of trade, we now have 12 trades that are positive and 8 that are negative. This time, the 12 trades make $1,800, and the 8 negative trades make $800. 8 times 100, and then 12 times 150. So then the total gain is $1,000, a $2,000 difference by just listening to the market, and the market's telling you, hey, you're trading in the wrong direction. Hey, your losses are much too big. Hey, your profitable deals are much too small. That's all you have to listen to and react to those. And I've just given you some ways of doing that. Just change the direction of trade, just increase your targets, just decrease your stop losses, and suddenly you have a beautiful new result. Now what I've shown you now is most probably a very simplistic approach, but you'll be surprised at how that very simplistic approach can change your trading results dramatically. Just change the direction of trade if you're experiencing a low success rate. Simply increase your targets or decrease your stops if you are not getting enough return on your transactions. But here are some other ideas that you can consider, and this is in fact a checklist that I use to evaluate how I can improve any trading strategy, be it manual or robot trading strategy. So here we go. So entries are normally unsuccessful for one of these potential reasons. Firstly, you could be entering too soon, or you could be entering too late. Now, how do you know that you're entering too soon or too late? You simply look at the chart, look at where your entries are taking place, and you can see, hey, I should have been entering sooner, or hey, I should have been entering later. So you look at the actual charts. That is the market talking to you and giving you advice. So please take it. So few traders actually look at their transactions on the charts after they have traded. Then the wrong direction is also obvious when you look at the chart. If you look at the chart and you are entering buys when you should be entering sells, it is so obvious. So again, looking at the chart can tell you whether you're trading in the wrong direction. And then one of the other reasons for failures is sometimes traders overtrade. They trade too many trades, and again, looking at the charts, you can see if you're overtrading or trading just the right amount. So what do you do if that is happening? You change your trading time. So you enter at different times of the day, or you change your indicator settings. So in other words, you make your indicators more sensitive to enter sooner or less sensitive to enter later. You also change the direction of trade, and that's the one thing that, again, there's a bit of a paradigm shift. If the market is saying, you know what, normally I buy when the moving averages when the price crosses the moving average going up, I buy. Now the market is telling me to do the opposite, and I have to do that. So you just change the direction of trade, your logic. Or if you are trading too many trades, one of the things we do is we change the time frame. So a 15-minute time frame will generate too many trades, so we move up to an hour time frame, which will generate fewer trades. So here's some of the ways that I fix my trading robots. And a lot of people have asked me, how do I fix my settings on a trading? And the only thing they can think about is optimizing again. Worst thing they could possibly do. Best thing they can do, just look at the charts. Just let the market tell you where you are going wrong. Open your mind to that advice. So the exits are normally very simple. You're either exiting too soon or you're exiting too late. And it's the same kind of solutions apply. You can change your trading times. You can trade your indicator settings. You can trade your stop sizes. You can change your target sizes. And you can change the exit settings, like for instance trailing stops and things like that. So you look at the charts, look at them very nicely, take each transaction and say, could I have done better with this transaction if I entered sooner or later? As simple as that. Look how simple trading is. There's only a few questions that you have to ask. And then the other thing is lot sizing plays a role. That $1,000 loss could have been reduced if you use smaller lot sizing. So lot sizing is something you need to look at. But once you have a good success rate, trades that profitable trades that make more than losing trades, you have a success formula, and lot sizing plays less of a role because you want to trade as much as possible. So, but you need to look at the lot sizing. Either the lot sizing was too high, that $1,000 should have been maybe a loss of $500 or maybe a loss of $250, or it was too low. So if you have a successful strategy, lot sizing might be too low, and then it's a simple thing, just change the lot sizing. So this gives you an idea of how the market is telling you what you are doing wrong and how it is advising you to change your evil ways. And if you do not listen to the market, and if you do not analyze those trades that you're making and find why your entries are problematic, why your exits are problematic, why your lot sizing might be problematic, if you don't take that feedback, you are going to battle for a very, very long time, because this is the way of solving trading problems. And again, I must emphasize, key way of finding this is by looking at the charts, actually looking at the transaction. Oh, I entered here. Oh, I exited here. I could have done so much better if I had a bigger stop or a smaller stop or this or that. You've got to analyze that. And the danger too is don't overanalyze. So you need 20 to 30 transactions. If you try and analyze one transaction, that's not good enough. You need to analyze this over, let's say, 20 to 40 transactions. Then you get a trend. Or I tend to have stops that are too small, or I tend to have targets that are too big, or I tend to enter too early, or I tend. So you go for those tendencies rather than over analyzing each transaction and trying to fix each transaction perfectly. Oh, I tend to have the wrong direction. You change it. Your statistics, those 3 statistics will tell you what where you need to pay attention, and then you do just that. Now I'm going to give you a practical example of a successful strategy and explain why this strategy is so successful. And let's have a look at this one. And these is from our linked account service, where you can link your account to successful trading robots. And I'm just going to go for the first one here. There's number 8. Let's open that one up and go to the FX Blue statistics about this strategy. And you can see the strategy is pretty consistent and is going up quite nicely. And let's go and have a look at why the strategy is so good. So those statistics that I mentioned earlier are already shown here. There is the success rate, trade win rate. There's the success rate. And here is the average win. You can see that's nice and high. And here's the average loss. That's nice and low. So immediately you can see this is a successful transaction because the average losses are small, the average wins are big, and we have a high success rate. So that is the profile of a successful strategy, and a lot of traders don't know what they're aiming at when they start trading. This is what you aim at. You want a good trading success rate. You want high wins on successful deals, and you want low losses on unsuccessful deals. That's what you're aiming at. Now, let's go and have a look at the analysis, because this analysis doesn't include the number of trades. So we'll go into stats, and we'll go into open and close stats. So now we can see the number of trades. So there are the number of trades, 168. There are the winners. There are the losers. There's the percentage, 73% is the winning, and 27% is the losing percentage. And then there's the average. There you can see 814 for winners, 689 for losers. So FX Blue, that's why I link all my accounts to FX Blue, because this is what I want to monitor. I want to make sure that the winners are positive, the average wins are bigger than the average losses, and that's how I monitor my strategies. If they're not, if the success rate goes down, I have a look and I found out if there's a solution. The simple solution is just reverse the direction, but the better solution is most probably refining the entry criteria from looking at the charts, the trades on the chart. But this is where you find it, and I thoroughly recommend that you link all your strategies, your manual strategies, as well as your robot strategies, and immediately start measuring the success rate, the average win, and the average loss numbers. Now, I hope you've learned something from this video, and please do not be like this guy who is totally ignoring all the good trading advice that he's getting, and spend time on your charts, looking at your historic trades and looking at each one and saying, how could I have done better? Could I have ended sooner or later? I could have exited sooner or later, that type of question. And that will give you the market's advice on your personal trading. A lot of traders want one-on-one advice. There you have it. Every trader gets one-on-one advice from the market. So from me, Alex Deploy, cheerio.